All right, fellow AMC stockholders, XMAX Trading here. Just go over some DD. I was able to get on Seeking Alpha right before the paywall. But go ahead and subscribe to the channel if you haven't already, and hit a like on the button and the bell icon for notifications, and let's get started. AMC Entertainment and EPR properties, people are going back to the movies. September 19th from Seeking Alpha, which is pretty amazing they're coming out and saying this. COVID will end eventually. People are seeking to go out and have some fun. AMC will benefit from that, as it is also benefited greatly from meme stock trading this year. EPR will benefit from better performance from AMC and offers a sizable dividend yield. I think EPR is some sort of Reit. The idea discussed, cash flow kingdom. Shanghai Legend of Ten Rings grossed $250 million. So far, it hasn't been released in China yet, which is typically one of Marvel's biggest markets. Free Guy crossed the 100 million mark. These indicators of people willing to go back to the theaters if they see the movie they want to be playing. In this article, I'll showcase the two investments that benefit from renewed interest in theater revenue. AMC's 5.75 2025 bonds. AMC, movie theater company, that maybe argued was a secular decline before COVID, and because of Netflix. Honestly, we don't care so much if that is true for this investment. We all need AMC to survive to 2025 and pay off its debts. During COVID, many theaters shut down. Those that haven't had streaming limited slate of movies to show. This led to demand falling off a cliff. 2020 P&L data is not very telling for judging the future demand. But the balance sheet remains key. Judging from high box office receipt, Free Guy and Shang-Chi, it's pretty clear the lack of movie releases has resulted in pent-up demand. Yeah, because I always said movies would go, like Blockbuster would kill movies and the radio would kill movies. Everyone's going to VHS, DVD, whatever's going to kill movies. But there's something to be said to seeing on the big screen. Best data we have to estimate the viability of these bonds is the current balance sheet and pre-COVID 2019 earnings back when we were still releasing blockbusters. Furthermore, while not using earnings to growth to justify the investment, we believe if any 2019 earnings are highly conservative estimate for 2022 earnings are due to pent-up demand. There's a whole slate of backed-up blockbuster movies, and the queue wouldn't be released. Bond, Top Gun, Dune, Spider-Man, Eternals, Snake Eye, Venom 2, Sherlock Holmes, Kingsman. S&P Global downgraded AMC's debt from B to triple C back in 2020, April. We don't believe AMC has sufficient source of liquidity. We believe the company will likely be breached at 6 times net senior lecture leverage covenant when tested September the 30th, 2020. Then they downgraded further in December 2020 to double C, default imminent low prospect of recovery despite a covenant waiver by lenders. The second downgrade was done because they considered the debt for equity exchange done with Murdoch Capital at the time to have been a bond default. Then things changed. Short squeezes by Reddit crowd gave AMC a second lease on life. Meme investors provided a surprising opportunity to recapitalize the firm. This opportunity is not lost on management, and they've issued so many common shares the share count ballooned from 103 million to 502 million. That's at times 4. The meme stock crowd may be irrational at times, but it was completely appropriate for the CEO of AMC to thank them for their support. Number of investors who want to own AMC continues to increase and now stands at 4.1 million individual investors. More than 8% of AMC shares are held by a broad base of retail investors, with average holding of 120 shares. Some hold more, some hold less. However, every shareholder is important to AMC. Every shareholder has a critical role to play in AMC's future. That's where the idea of these fake shares is coming. It's like if we own 80% of these shares and we're not selling, what's going on with the price action? The offer of free popcorn to the Reddit crowd, blah, 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 blah. Free popcorn and encouraged them to create, and the free popcorn press release helped encourage them to do that, to create another short squeeze. Able to cash out a large chunk of shares, a free tub Who gives a crap about the stupid free popcorn? Nobody gives a crap. God, these people are dumb. AMC's balance sheet dramatically changed to the Reddit meme crowd, yet AMC's 5.75% subordinate debt due in June 2025 can still be bought around $750 with a 14% yield to maturity. In part, this is because the rating servers and screening tools have yet to catch up with the remarkable change Shang-Chi indicates of ongoing demand. Also, many misunderstand the difference between common shares selling is going to be like a likelihood of 2020 mature debt getting paid. S&P Global, for instance, still has a rated C plus, triple C plus. Yeah, if one estimates AMC can break even on earnings in 2022, net debt EBITDA would be well under the previous 6 times covenant. Additionally, we take solace in the fact that AMC has enough cash on hand to fully pay off all debt obligations through. Additionally, we take solace in the fact that AMC has enough cash on hand to fully pay off debt obligations through 2025. That's amazing. The debt issue is what shorts rail on. Debt covenants have been relaxed through March 2022. Instead of a leverage covenant, AMC agreed to a minimum liquidity test, an anti-cash hoarding test, and additional reporting requirements. This allows not only the current state of blockbusters that have been waiting in the wings to come to market, but also for new blockbusters in development to be released. In the meantime, $1.8 billion cash helps alleviate bankers' concerns and lead to further covenant extensions if necessary. Frankly, I'm pretty sure AMC's landlord, EPR Entertainment, would agree to even be happy to adjust AMC's lease terms if necessary. EPR is another firm that also indirectly benefits from people's pent-up demand and have some fun. EPR Properties. EPR owns 3% of all U.S. theaters, but they produce 8% of all theater revenues. In other words, EPR owns some of the highest volume locations and more than twice the average revenue per location. This means that even if the overall number of theaters is reduced, EPR's prime theaters should remain and possibly even gain market share. We haven't covered EPR properties publicly since just in that they're common at $24 during the COVID crash. However, we continue to own and follow EPR Cash Flow Kingdom members behind the paywall and considered a good investment today, despite stellar gains already occurring. EPR Properties net release Reit, which owns experiential properties where people go out and have some fun or learn something. Tenants of EPR include AMC, Topgolf, private schools and childcare, Regal cinemas, ski resorts, fun hospitalities. Interesting. But of course, it fell dramatically hurt these businesses during COVID. Once COVID ends, we expect the desire to go out and do things to return with a vengeance. Following Spanish Flu War I, we got the Roaring 20s. 71% of Americans have high level of excitement for traveling next 12 months. There should be plenty of demand to go out, and most EPR tenants remain open despite COVID Delta. But they had to do modifications. We have little doubt that once COVID is over, demand will further increase and cause high revenues per location in 2022 than prior to COVID. That means tenants will have money to spend and continue to pay rent. And what little back rent is still owed. EPR generates 7% of adjusted funds from operations, guidance calls, EPR's balance sheet. So it's more like income play management, valuation, management alignment, risk to be considered. COVID risk could change, duration mismatch between the leases. Takeaway, maybe longer than we wish to get past COVID, but eventually we'll get behind us. COVID vaccine, reducing consequences of the virus. And governments don't want to shut down economies. The high theater attendance and the receipts for a free guy in Shanghai are positive indicators. AMC's landlord, various indicators such as restaurant, hospital, travel, they also support the notion of significant pent-up demand to get out and have fun. Not just positive for AMC, but for all of EPR's tenants. We expect 2020 revenues and profits to be higher than they were in 2019. AMC's bond at 14% and EPR are two solid ways of reinvesting in this recovery. So he's disclosure that he's long on shares of EPR and AMC bonds. I read the article myself. So yeah, pretty interesting, guys. All right, guys, till next time.